So today's topic is the tax advantages of a home-based business. And one of the things that I've really recognized for a long time is how great an opportunity it is to bring people into the business using this tool, this technique. What I'd like to say, first of all, I'll just give you my qualifications. My name, once again, is Alan Borsen. I'm a CPA practicing in West Bloomfield, Michigan. I've been in the industry of accounting. I've had my own practice, been a partner for the last 20 years. I've been at the same firm for 31 years. So I have a lot of experience in this area. But the one disclaimer I'd like to make right now, the information I'm going to give you right now is factual. It's from IRS code. However, I am not giving anybody on this call tax advice. You need to get together with your tax advisor and see how these tax advantages are going to fit into your situation. So now that I did that, let me just get right into it. So by owning a home-based business, you're going to be able to save on your taxes annually anywhere from $3,000 to $6,000 by utilizing the advantages that the government allows you to do by owning a home-based business. Let me say that again. You're going to save annually $3,000 to $6,000 in taxes that you're already paying now without paying any more money out of your pocket. We're talking about expenses that you're already paying. You're going to save $3,000 to $6,000 a year. And I have to tell you, unfortunately, while this is good for the home-based business, that number is going to get greater in the years to come, because with the tax cuts that are expiring at the end of this year, tax rates are only going up. Now, this gets even better for us, because once you figure out how much you're going to save in your taxes, you don't have to wait until April 15th or when you file your tax return next year to get that money. And you want to know how that is? You figure out what you're going to save in taxes. You go to, if you're a W-2 employee, you go to your payroll tax department, and let's say you figure out that you're going to save $200 a month in your taxes and that you get paid weekly. So you go to your payroll tax department and you tell them that you want $50 a week less taken out of your current paycheck. So you're able to get that money starting today if you are in a home-based business. How great is that? You don't have to wait until you get your tax refund next year. You can go to your HR department and have them reduce your deductions right now, today, once you figure out how much you're going to save on the taxes. So that's what you have to do, and that way you're going to get the money right now. And now, how easy is it to qualify? Now, this is one of the questions that everybody has. You know, is this, anybody can do this? Work your business 3 to 4 hours a week. Be able to prove that you're attempting to make a profit. Keep adequate business records. And Congress says, that's it. That's all you have to do. Now, is that difficult? Not at all. A lot of people have asked me, you know, if I have losses for 3 years in a row, is the IRS, they're going to call that a hobby and they're going to disallow my business, aren't they? And that's a complete myth. That is not true at all. What you need to do is make sure that you're running your business with the intent on making a profit. And if you do that and you happen to lose money more than 3 years, you might make a decision financially to shut down your business, but the IRS isn't going to automatically come in and say, that's a hobby, your deductions don't count. So everybody needs to understand that as long as you're running your business attempting to make a profit, you keep adequate records and you're working on it 3 to 4 hours a week, you have the ability to take advantage of these deductions. Now, a lot of people are going to say that when I tell you what you can save and some of the deductions that you are able to take advantage of, your mouth's going to just drop. You're going to drop and you're going to say something that I'm going to hold off until I do that. So basically, we have advantages, and what I'm talking about is money that you're already spending. And there's hundreds and hundreds of tax advantages, but I'm going to touch on what I think are the biggest ones that we're all using right now that we may have to understand. And once again, remember, this is a way to approach people to get into your business, because people who are W-2 wage earners, they don't have the ability to deduct these items. So the first one is a home office deduction. And what the home office deduction is, if you're running your business out of your home, then you're allowed to deduct the costs of maintaining your home. The biggest thing here is you must have a room that's used exclusively for that business. So it can't be the kitchen where you're serving your family dinner. It can't be the family room where people are watching TV and playing video games. But if you have a room in your house that is exclusively used for your business, your computer's there, you have a telephone there, your files are there all for your business, and it's not used for anything else, then you can take the percentage that that room is to your home and deduct your home expenses, your taxes, your mortgage interest, your maintenance fees, your association dues, your electricity, all your utilities, your upkeep, all of that. You can take that and take the percentage of your home and deduct it. Now, some people say, well, I get my interest and taxes on my Schedule A anyways. The best part about it is if you can move some of that to the front page of your return, and I don't mean to get too technical here, but that will allow you to take a deduction on your state return. And for people in New York, California, that's a huge, huge thing. Now, also, the next thing is the business use of your personal vehicles, and this is a really big deduction. So now when you're using your car to go to meetings, to go to lunches, to go to other towns, to present the opportunity to people, you now have a percentage of your vehicle that you get to deduct. So if your car payments are $300 a month and you're using your car 50% for business, that's an $1,800 deduction right there. So it's another huge thing. These are already expenses that you're already paying. Remember, we're not taking any extra money out of our pocket. The combining of business with pleasure while on trips. Our vacations now become deductible. So basically, you're going on a vacation, and because this is a home-based business and you're going to be presenting this pure 3X opportunity to people that you see in a restaurant, people that you see at Starbucks, people at the pool, when you're doing that and you document it, you're going to be able to deduct the trip. So if you're going on a family vacation to Florida and you have relatives there, when you go and talk to the relatives about the business, you now get to deduct your plane fare, because your plane fare would have been the same if you went there for 1 day or 7 days. You can't deduct your hotel room for every night. You have to keep track of when you're going, what part of that trip is business. But you're now being able to deduct vacations. I mean, how phenomenal is that? We had a group of people that went to Las Vegas. There were 4 couples. They went out to Las Vegas for a weekend. They did an agenda for a meeting for the business, and they went out to the pool, and they really sat around the pool, and they discussed how they were going to grow their business, what they were going to do to help each other. So there were 4 couples. Each of them were able to deduct their plane fare for both of them, for both people in the couple, and their hotel room for the nights that they had the meeting. So they just turned a trip that they were taking every year for pleasure into a business trip. Meals and entertainment. When you are taking somebody out to lunch or dinner or to a concert or to a ball game, if you're taking them there to build your business, you get to deduct 50% of that, because the law is 50% of your meals and entertainment for business purpose are deducted. So typically you could be spending $200 a month on dinners with friends that you were already going to, and now if you're presenting them the opportunity, or if they're already in the business and you're talking about the business and you're figuring out how to talk to the waiter or to the manager or to the people tomorrow at your meeting that you're going to have at your house, that meal becomes deductible. I mean, how phenomenal is this, everybody? I mean, think about all the money you're already spending. We're not even talking about laying out any additional money than what you're currently spending in your day-to-day life, and these are all deductible. You're also going to be able to expense out-of-pocket health and medical costs because you're now in business. And one of the greatest things is you can now employ your children. If you have children that are under the age of 18, you can employ people over the age of 18, but if you have children under the age of 18 that are working for you, you can give them a W-2. You don't have to pay Social Security tax on that, and the wages that you pay them is a deduction to you. And it'll take a while before they even have to pay tax on that. So that's a huge, huge opportunity to save money right now. Office expenses, computers, supplies, cell phone, internet, those are all things that are now being used for business that you're now going to be able to deduct. So the average savings by figuring out the tax bracket of 25%, and I've run the numbers, but I don't want to go into them all right now because I'm running out of time, but I will do a more in-depth training at a later time. you're going to save anywhere from $3,000 to $6,000 a year without taking an additional penny out of your pocket. So just imagine what you can do with that money. I got a great idea. Why don't you take that money and get on auto ship every month, and now you are in pure 3X without taking an additional nickel out of your pocket. Now, if you can go present that to friends, to relatives, to family members who need a home-based business, and you know they do, you hear people complaining about taxes all the time. When people are complaining about what's going on up in Washington, and that, when they talk about the tax rates going up and the Bush tax cuts being expired, that's an opportunity right then and there for you to start talking to them about needing a home-based business. I think this is a great opportunity for us to bring people into the business. So I want to answer a couple other questions that I know you have. First of all, you're sitting there thinking, oh my gosh, I've been in a home-based business for the last 5 years. I've never taken advantage of that. Well, guess what? For the last 3 years, if you can document those expenses, you can go to your accountants, you can go to your tax preparer, and you can amend your tax return for the last 3 years and still take advantage of those expenses that you were using that you just forgot to put on your tax return. So guess what's going to happen when you amend your return and you take those deductions? You're going to get a check from the government as a refund, and there may even be some interest on that. So think about what you've been doing the last 3 years and if you've fully taken advantage of all the tax breaks that you can take. Now, if you're not ready to get started, so people who aren't ready to get started, how can they afford not to? The cost of not having a home-based business is huge. Understanding the tax benefits that come with it, it's huge. So while people are procrastinating, while they're delaying starting a home-based business, tell them they're overpaying their taxes by about $20 a day, day after day, $100 a week, week after week, $400 to $500 a month, month after month, and $35,000 to $6,000 a year, year after year, while they're trying to decide if they should get into a home-based business. Why should they wait? Get them into the home-based business today.